Warren Buffett is a business magnate, an investor, and a philanthropist. He started very small and built his company, Berkshire Hathaway, in one of the largest companies in the world. So let's jump right into the presentation. Warren Buffett was born in 1930, second of three, son of Leila Stahl and Howard Buffett. He started school in Omaha, Nebraska, but later moved to Washington, D.C. when his father was nominated congressman. He didn't like school at all, but he was really good in math. He showed interest in business when he was already very young. He read books on business and finance. He delivered Washington Posts around the block. He sold Coca-Colas. After he read the book 1,000 Ways to Make $1,000, he decided to buy pinball machines and placed them in barber shops. He accumulated his money and bought more, and when he was still in high school, sold the business for $1,200 to a veteran. He didn't like school at all, but he was really good in math. He showed interest in business when he was already very young. He delivered Washington Posts with his bike. He sold Coca-Colas around the city. And later, after reading the book 1,000 Ways to Make $1,000, bought a pinball machine and placed it in a barber shop. He accumulated his money and bought more until he sold his business when he was still in high school to a veteran for $1,200. He had a great interest in stocks. At 10, pushed his parents during a New York City trip to go visit the New York Stock Exchange and bought his first stock when he was 11, Cities Service. In high school, invested in a business owned by his father and bought 40 acres of land, which he later sold. By the time he finished college, he had $9,000, which would be more than $100,000 today. He had a great interest in stocks. At 10, he pushed his parents during a New York City trip to go visit the New York Stock Exchange and bought his first stock when he was just 11. In high school, he invested in a business owned by his father and bought 40 acres of land, which he later sold. By the time he finished college, he had $9,000, which would be more than $100,000 today. He studied business at University of Nebraska, and once graduated, he wanted to go to business school. He had an interview with Harvard, but he was discarded. Once he got back to Omaha, discovered that one of the authors he read, Benjamin Graham, was a professor at Columbia. He wrote him a letter, and Benjamin Graham got Warren Buffett in. He was really good, and after he graduated, he went to New York Institute of Finance, founded by the New York Stock Exchange itself. Even though he was great in finance, he understood he wasn't good at speaking, so he took a course with Dale Carnegie and later started an evening investment class in Omaha. He worked for his father's business from 51 to 54 as a salesman, got married to Susan in 52, and got his first son in 53. But he didn't budge when he got the chance to work for his hero, Benjamin Graham, from 54 to 56 as a financial analyst. In 56, Graham closed the firm when he retired. He was quite successful, but he didn't budge when he got the chance to work for his hero, Benjamin Graham, from 54 to 56 as a financial analyst. In 56, Benjamin Graham closed the firm when he retired. So in 56, Warren Buffett got back to Omaha and started his first partnership. The year later, the partnerships became 3. In 59, he met Charlie Munger, a key figure that shaped the success of Berkshire Hathaway. In 1960, he further raised $110,000 more. One particular thing to notice about these partnerships is that Buffett didn't take management fees. He took fees only on performance and promised to give back part of the money that would be lost. So he was really confident, and the fees he took were reinvested in the partnerships. In 61, he made an amazing deal. He had 35% of his holdings in St. Bernard map company, which traded around $45. It had a book value of around $60. He made it to the board of directors and got the company to buy back stocks, which increased the value of his holdings by 50% in 2 years. This approach later got critical about and is commonly used by investors such as Carl Icahn and Bill Ackman, which I've also covered, so make sure to subscribe for more videos like this one. In 1962, Buffett became a millionaire and merged all his partnerships in one. He took control of Berkshire Hathaway, which was a textile manufacturer at that time, Seabury Stanton, the former owner. He started buying until 14, while the intrinsic value was around 19. Stanton should have bought back at 11 and a half, but he made a tender offer at 11 and 3/8. This got Buffett really angry and continued to buy in order to have enough control to fire Stanton. He succeeded and nominated new management, but the investments in textile didn't work out. He later said it was his worst investment mistake. So he took Berkshire assets and invested big in insurance companies. After his most successful year, 1967, he liquidated the partnership and gave money back to the investors, and later became CEO and chairman of Berkshire Hathaway, and in 1970 started writing his letters to investors. In 1973, he started buying Washington Post stocks through Berkshire Hathaway. In 1974, Wesco Financial. The SEC conducted an investigation on possible conflicts of interest, but they didn't find anything. In 1977, Berkshire acquired Buffalo Evening News for $35.5 million. He also made a notorious purchase in the National Indemnity Company and Geico. In 1979, started buying stock in ABC, and when Capital Cities announced a $3.5 billion stock purchase, Buffett got a 25% stake in the newly formed company. He later had to sell a part of his stake due to ownership rules in the media sector. Another notorious purchase was the 12% stake in Solomon. This firm, unfortunately, made too many risky trades, more than what allowed by the federal law, and these trades ended up turning south. In the early 90s, the firm started doing very bad, and Buffett took the nominee of chairman at Solomon until the crisis got solved. In the same years, Berkshire made one of its best investments, Coca-Cola, which had a very bad year because of the new taste Coca-Cola, which flopped very badly. Berkshire still owns this position. In 1990, Buffett became a billionaire and purchased General Re, one of the major reinsurance companies in the world. Hathaway shares suffered greatly during the crisis in 2007 and 2008. He had the possibility to buy big into Lehman Brothers, but he saw that the firm was too troubled and couldn't be saved unless federal money came in. Anyway, Buffett got out stronger because he had the possibility to buy big, especially preferred stocks in Goldman Sachs, one of the most important investment banks in the world, Wells Fargo, Bank of America, Bank of New York Mellon, US Bancorp, PNC Financial, M&T Bank, and more. In 2008, he was the wealthiest man in the world, but he later got surpassed again by Bill Gates. In 2012, he was diagnosed with prostate cancer, but he was able to recover. He continued making major purchases, and now Berkshire has a market cap of around $500 billion. Not bad, right? So what is his investment strategy? What is he looking for as an investment? First of all, high return on assets, good management, low PE ratio, strategic advantages, high dividends, and productive assets. What does it mean? It means that When he buys stocks, he wants to have a high return on his capital because once he gets the money back, he can reinvest them and the machine of compounded interest will do the job. Nowadays, he has become more involved in philanthropy and politics. He donated several $1 billion to charity through Bill and Melinda Gates Foundation and through the other organizations managed by his sons. He started the movement of the Giving Pledge. Those who signed to this promised to donate more than half their net worth after death. He helped the Obama administration in the making of a new tax regime. Even though Warren Buffett is highly respected, he received lots of criticism. Alice Schroeder, the author of the Buffett's biography, said that looks for good management, low PE ratio, strategic advantages, high dividends, high return on assets means that the company needs not much money in infrastructure in order to make a profit. Good management speaks for itself. Low PE ratio is the ratio between the price of the stock and the earnings of the company. Strategic advantages can be anything from cost to strengthening the brand, for example, Nike, or infrastructure and many more. High dividends is the dividend paid out to the investors so that he can accumulate dividends and reinvest them once again. Nowadays, he has become more involved in philanthropy and politics. He donated several billions to charity through Bill and Melinda Gates Foundation and through the organizations managed by his sons. Started the movement of the Giving Pledge. Those who signed to this promised to donate more than half of their net worth after death. He helped Obama administration in the making of a new tax regime. Even though Warren Buffett is highly respected, he received lots of criticism. Alice Schroeder, the author of the Buffett biography, said that aside from the facade he has in public, he is generally angry and has an extreme determination, which sometimes is too much. She made the example that on 9/11 he was extremely mad at General Re CEO because he told to reduce his risks in the World Trade Center. Another bad review of him came from the book Barbarians at the Gate, where Buffett said Solomon CEO it would be fine for him to finance what became the largest hostile corporate takeover made by KKR billionaires Henry Kravis and George Roberts, which I later cover, so make sure to subscribe. He reportedly said he was open towards the buyout of RJR Nabisco because the tobacco business was a very good one. Cigarettes cost 1 cent to make and sell for $1. They're addictive and there's highly brand loyalty. I'll link each and every one books about Buffett in the description. We are a new channel, so make sure to like in order to support us. Leave comments and tell us who you would like to hear about. If you want to support us, you can do it by simply doing your regular shopping on Amazon after clicking one of the Amazon links down below. You can also support us through PayPal, link in the description as well. That's it for today, and stay tuned for the next episode.